Are you starting a business in California and wondering which structure is best for you, an LLC or an S-Corp? Well, this decision can significantly impact your business's operations, taxation, and overall success. In this video, we'll dive deep into the key aspects of LLCs versus S-Corps in California to help you make an informed choice. And by the way, if you would like to get help in starting your own LLC or an S-Corp, I highly recommend you sign up with Northwest Registered Agents. They're professionals and they'll be able to help you out. You can get your LLC started for as little as $39. And for your convenience, I left my affiliate link down in the description of this video. And with that in mind, let's get started. The formation process of an LLC in California. To form an LLC in California, you first choose a unique name that includes Limited Liability Company or LLC. You must then appoint a registered agent who will receive legal documents on behalf of your LLC. Next, file the Articles of Organization with the California Secretary of State and pay the filing fee. After that, create an operating agreement, which is recommended but not required. Obtain an Employer Identification Number, EIN, from the IRS for tax purposes. Within 90 days of filing the Articles of Organization, file a Statement of Information with the Secretary of State. This statement must be updated every 2 years. Finally, ensure you pay the annual minimum franchise tax of $800 to keep your LLC in good standing. Forming an S-Corporation in California. To form an S-Corp in California, start by choosing a unique name, typically ending with Corporation, Incorporated, or Inc. Appoint a registered agent to handle legal documents for the S-Corp, then file the Articles of Incorporation with the California Secretary of State and pay the filing fee. Create corporate bylaws to set operating rules for the corporation. Appoint directors and hold the first board meeting to adopt bylaws, appoint officers, and issue stock. Obtain an Employer Identification Number, EIN, from the IRS. File Form 2553 with the IRS to elect S-Corp status signed by all stakeholders. Like an LLC, file a Statement of Information within 90 days of incorporation and annually thereafter. LLC taxation in California. LLCs in California pay an annual minimum franchise tax of $800 no matter their income. If an LLC's total income is over $250,000, they also pay an extra fee based on their gross receipts. By default, single-member LLCs are taxed like sole proprietorships, while multi-member LLCs are taxed like partnerships. Members report their share of profits and losses on their personal tax returns and pay self-employment taxes on these earnings. LLCs can choose to be taxed as a corporation or S-Corp by filing with the IRS. This can help reduce self-employment taxes since only salaries are taxed, not the overall profits. It's important to keep track of these obligations to avoid penalties. Consulting a tax professional can help navigate these requirements effectively. S-Corp taxation in California. S-Corps in California are taxed as pass-through entities, meaning profits and losses go directly to shareholders' personal tax returns. They avoid double taxation seen in traditional corporations. S-Corps must pay the higher of $800 or 1.5% of their net income as franchise tax. Shareholders who work for the S-Corp must pay themselves a reasonable salary, which is subject to employment taxes. Dividends paid to shareholders are not subject to self-employment taxes, which can save money. S-Corps need to file an annual tax return and meet federal and state tax obligations. Properly managing these taxes is crucial to maintaining the S-Corp status. It's advisable to get help from a tax professional to ensure compliance. Ownership and management of an LLC. LLCs in California can have any number of members, including individuals, partnerships, or other businesses. There are no restrictions on the citizenship or residency of members. Management can be flexible. It can be member managed, where all members handle daily operations, or manager managed, where appointed managers run the business. This structure works well for small businesses where owners want to be actively involved or for larger businesses needing professional managers. LLCs don't require a board of directors or annual meetings. They need an operating agreement to outline management roles and decision-making processes. This flexibility makes LLCs a popular choice for many business owners. Ownership and management of S-Corporations. S-Corps in California can have up to 100 shareholders who must be U.S. citizens or residents. Only individuals, certain trusts, and estates can own shares. Other businesses cannot. S-Corps must have a board of directors elected by the shareholders. The board oversees the corporation and makes major decisions. Daily operations are handled by officers appointed by the board, such as a CEO or CFO. Shareholders have limited involvement in day-to-day operations, but can vote on major issues. This formal structure ensures a clear separation of ownership and management roles. Liability protection in an LLC. In California, LLCs offer strong protection for their members' personal assets. Members are not personally responsible for the LLC's debts or legal problems. This means if the LLC is sued or goes bankrupt, personal assets like homes or cars are usually safe. However, this protection isn't absolute. Members can be personally liable if they guarantee a loan, commit fraud, or mix personal and business finances. LLCs also benefit from charging order protection, which limits creditors' access to the LLC's management. This setup provides a high level of security for members' personal assets. Liability protection of an S-Corp. S-Corps in California also protect shareholders' personal assets from business debts and legal issues. If the S-Corp is sued or goes bankrupt, shareholders' personal belongings are generally safe. However, this protection has limits as well. Shareholders can be held liable if they guarantee a loan, commit fraud, or fail to keep personal and business finances separate. Unlike LLCs, S-Corps do not offer charging order protection, which means creditors can gain control over shares. Maintaining clear separation between personal and corporate finances is crucial. Overall, S-Corps provide solid personal asset protection, but with some limitations compared to LLCs. Operational complexity of LLC. LLCs in California are easy to operate with fewer formalities. They don't need annual meetings or a board of directors. Members must file a statement of information every 2 years. The annual minimum franchise tax is $800. This simplicity makes LLCs attractive for small businesses. Operational complexity of S-Corps. S-Corps in California have more formal requirements. They must hold annual meetings for shareholders and directors and keep detailed records. A statement of information must be filed annually. S-Corps also need to pay the greater of $800 or 1.5% of net income in franchise tax. These requirements ensure proper management but add complexity. Profit distribution in an LLC. LLCs in California offer flexible profit distribution. Profits can be shared in any way agreed upon in the operating agreements. Members pay taxes on their share of profits, which are subject to self-employment taxes. This flexibility suits businesses with diverse financial arrangements. However, members must carefully manage tax obligations. Profit distribution in an S-Corp. S-Corps in California must distribute profits based on ownership percentages. Shareholders receive dividends, which are not subject to self-employment taxes, but salaries are taxed. This setup can save money on taxes. S-Corps have less flexibility in profit sharing compared to LLCs. This structure is good for consistent profit distribution. So, choosing between an LLC and an S-Corp in California depends on your specific business needs, financial goals, and operational preferences. If you prioritize flexibility and simplicity, an LLC might be the right choice. However, if you seek potential tax savings and are comfortable with more formalities, an S-Corp could be more advantageous. Consider consulting with a legal or tax professional to tailor your decision to your unique circumstances. So, are you ready to form your business in California? If you would like to get help in starting your own LLC or S-Corp, then make sure to use my affiliate link down in the description of this video and sign up with Northwest Registered Agents. They're professionals and they'll be able to help you out. You can get your LLC formed for as little as $39. I hope this video was helpful. Thank you so much for watching. Till next time.